Ayo, 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 what up, what up, what up? This is your boy FAM. Uh, we are back today with another video where I'm gonna share you again the psychology of Forex. Um, First, before I begin, guys, in Forex deals a lot about the psychology. I love to say Forex is a game of uh, it's a game of perception. Sorry about that. Let me adjust my mic. Forex is a game of perception. Why I'm saying that? Uh, most of the time, guys, Forex they deal about your illusion. They deal about how do you see stuff. Because as I said on the previous video, uh, they will deal about how do you see stuff, um, how do you perceive some chart. So that's why I love to say most of the time Forex is a game of illusion. Why? Because they will build illusion. They will build illusion. They will put you on illusion. They will put you on an illusion to try to make you commit your money. Look, guys, listen. Now listen. Your account is still your account, right? Until you start trading. That means, guys, um, the market makers they don't have power over your account until you start taking a trade. That means taking a trade right now. When you take a trade, the market makers don't mean right now they have power over your account. You can deposit, let's say, 10,000 rand on your Forex account, right? In spite of any broker that you want to trade with. But again, guys, you must be very careful on which broker you are trading under, on which dealer you are trading under. So on this podcast, guys, I want to teach you that, guys. I want to teach you the basics, the fundamentals um, of Forex, on how to perceive, and again on building a psychology. I love to say, guys, a strategy is based on a psychology, or it's based on your psychology, the way you perceive charts. That is how a strategy is built. By your psychology, the way you perceive charts, that is how you're going to develop a strategy. So today, that means for you to have a strategy, you need a special kind of a way of perceiving on charts. How do you see charts? How do you analyze charts? What do you see when you are looking at a macro and a macro time frame? That is where the strategy comes about. So most of you guys, we are busy chasing a strategy. It is good for you to chase a strategy. Why? You are chasing someone else's way to perceive the market. They have spent an unlimited time proving that way, proving that system, proving that theory. Therefore, at the end, they collected the data that they had, the psychology that they gathered, and they sat down and built a strategy. In Forex, guys, I want to teach you this. There are two kinds of strategy, guys. In Forex, there is a winning strategy and a losing strategy. Sorry, guys, there are three strategies. Let me add these three. There is a winning strategy, there is a losing strategy, and lastly, there is a lukewarm strategy. What do I mean about lukewarm strategy? It is that strategy that I hate. The 50-50% strategy. Meaning that you don't have any strategy. You just enter the market based to what you hear, based to what you saw, based to what uh you hear someone talking about the market, like, oh, you can really make cash on Forex, or you saw some Forex trader online posting their life, posting their fabulous cars, right? That is good, guys. That is good, right? That is good. That is excellent. But you don't want to enter Forex based on that. You can use that as a part of your motivation. But you don't want to enter Forex based on that, guys. You don't want to enter Forex based on that. You don't want to use that like as the form of, or as your as the primary like motivation for you to trade Forex. Okay, guys. Before I start confusing you, I want to talk about the players that contribute on the Forex market, right? Number one, guys, they are what we call market makers. They are what we call market makers. Market makers, I can say they are primary contributors, right? They are primary contributors on the market, on the Forex market. That is the primary player. The second player comes the broker or the dealer that you are trading under. That is the second player on the market. Lastly, the third player and the last player, guys, it's you. It's you. Meaning, guys, there are some people says they are professional traders, right? Let's put professional traders on number two, the brokers and dealers, and some small banks, right? Like central banks, right? The professional trader enter on number two, but you are the last player, the retail trader, the trader that they confuse by the terms of fundamentals and technicals. They will try by all means, guys, to confuse you. Are you the most question I hear is this: Are you trading fundamentals or are you trading technicals? It's more like that's why there's a fight. People will be like, fundamentals are more safer than technicals, and some say technicals are more safer than fundamentals. So the question that is what I will ask you even now: what are you trading? Are you trading fundamentals or are you trading technicals? I know you'll be saying, some will be saying I'm trading fundamentals. Some will say I'm trading technicals. That is the way that you choose to enter the market, right? Because you think that watching the news can be manipulated, right? Say, if they say USD is gonna fall, it's going to be a fall, right? If it was that easy, all of us will be on your fundamental side. You'll be watching news. They'll be like, USD is gonna be like USD gonna see a short, and all of us will be shorting, right? That means most people will be making cash. If trading news is more and more and more reliable than trading technicals. But by me saying this, guys, I don't want to discourage you from trading technicals or fundamentals. You see, I don't want to discourage you even for let's say trading news, NFPs. I do trade those, but I'm not a technical, no, a fundamental again. You see, I like to put myself in the middle and call myself a trader. I use what benefits me at that time. If I could say it, my technicals and fundamentals are both part of my system. So guys, let's get into it. There are three players that contribute on the market. First player are market makers, therefore comes dealers and brokers, and there is you guys. You are at the last. You see, you are at the last. You are at the last. Imagine, okay. What is a market maker, guys? What is the market maker, guys? What is the market maker, guys? A market maker, guys, is the intermediaries in sales and purchases between two parties and two currencies. A bank can function like a market maker when it collects sellers of the US dollar to the investors, or when it collects sellers of USDs to then sell to investors who have euros in exchange. Those are market makers. But there is a difference between market makers and traders, like, let me say, retail traders. Overall, guys, market makers are traders like us, and their main objective in the market is to make money. And this include strategies to trade against retail traders. They are traders, guys. If you have a strategy of making money in the market, they have strategy, even them, to make you lose money. And the major difference between them and other traders is that they have the ability, you see, through access to massive volume, to move the price at will. What do I mean, guys? Meaning that they can short wherever they want, and they can buy whatever they want, wherever they want. That's why you see the market flowing like a zigzag, right? It will be a short, e.g., let's look at the short. I want you in your mind, picture a short. There is a short, the market is short, or the market is a sell, or the market is going down. But in that market, in that falling market, right? In that falling market, there will be small longs. That means they buy the price at will. They buy the price at will. They can sell and buy the price at will. So if market makers are traders, guys, think of this. How do they book their profit? Because like you guys, you can book your profit, right? So if they are traders, they can't book their profit either. As I said from the beginning, guys, they to book their profit, they must induce you to take a position. And their induction, they will show some patterns. You will see an M or W pattern anyway. You will see a double bottom anyway. They'll push the market and put it on a trend line form. Hit your support and resistance. They know about that. They know, guys. They know. Come think of it. You think the market makers, they don't know about your support and resistance that you lend or on YouTube on a free video. Imagine paying someone to go and teach you a support and a resistance. Some of you guys, you are wasting cash. But what are we going to say, guys? What are we going to say, guys? If you are lazy to think, some people will take your cash. Some people, they will make money out of you. Two, guys, they will create a panic or fear to induce you. Imagine, to induce you, retail trader, to become emotional and think irrationally. Meaning, guys, you will see spikes, right? You will see spikes going against your direction. Bah! That is a fear. You want to chase that move. You will see a spike going to your direction. Wow, that is a panic. You want to close that move. That will make you guys think emotionally. Because why? They know, guys. They know that if they can get you to be emotional, they have taken 60, if I could say 60 to 80% of your focus on charts. And while you are emotional, then you will think irrationally. Why? Because the emotions that you are facing will push you to take a position, the emotion will push your mind to take a position in its irrational state. So, guys, today I'm giving you the psychology, guys. I'm giving you the powerhouse. This is the powerhouse of Forex, guys. Come to think of it, guys. You will see spikes everywhere.